We had the greatest asset bubble in history, and now that bubble is bursting. The single biggest piece of the bubble is the U.S. mortgage market, and we're probably about halfway through the unwinding and bursting of that bubble.
Halfway?
It may seem like all the carnage out there, we must be almost finished, but there's still a lot of pain to come in terms of write-downs and losses that have yet to be recognized.
The trouble now is that the insanity didn't end with the subprimes. There were two other kinds of exotic mortgages that became popular, called Alt-A's and Option Arms. The Option Arms, in particular, lured borrowers in with ultra-low initial interest rates, called teaser rates, sometimes as low as 1%. But after 2, 3, or 5 years, those rates reset. They went up, and so did the monthly payment. So a mortgage of, say, $800 a month could easily jump to $1,500.
The defaults right now are incredibly high at unprecedented levels, and there's no evidence that the default rate is tapering off. Those defaults almost inevitably are leading to foreclosures and homes being auctioned and home prices continuing to fall.
What you seem to be saying is that there is a very predictable time bomb effect here.
Exactly. I mean, you can look back at what was written in 05 and 07, you can look at the reset dates, you can look at the current default rates, and it's really very clear and predictable what's going to happen here.
Just look at this projection from the investment bank of Credit Suisse. These are the billions of dollars in subprime mortgages that reset last year and this year. Now look at what hasn't hit yet. The Alt-A and Option Arm resets when homeowners will pay higher interest rates in the next 3 years. How many of these Option Arms would you imagine are going to fail?
Well north of 50%. My gut would be 70% of these Option Arms will default.
That second wave is coming ashore at a place you might call the Repo Riviera, Miami-Dade County. Oscar Munoz used to sell real estate. Now his company clears out foreclosed homes.
Business is just going through the roof for us. Fortunately for us, unfortunately for the poor families who are going through this.
I wonder, do you ever come to houses where the people are still here?
Absolutely. That's really a sad situation. I'd rather not meet the people.
Why not?
It's not easy to come in and move a family out. It's just our job to do it for the bank. It's just the nature of what's going on in the market right now.
What is going on in the market right now? How much work are you getting?
Every day we have 20, 30 assignments.
A day?
A day.
Just your company?
Just our company. And we're one of the few companies right now who are hiring. We have to hire people because the demand is so high.
Once the homes are empty, the hard part starts, trying to find buyers in a free-fall market. Miami real estate broker Peter Zalewski talks like a man with a lot of real estate to move.
We have 110,000 properties for sale in South Florida today, 55,000 foreclosures, 19,000 bank-owned properties, 68% of the available inventory is in some form of distress. They need someone to clean it up.
This next wave of defaults, which everyone agrees is inevitably going to happen, how central is that to what happens to the rest of the economy?
It's core. It's core because housing is such an important part. We're not going to get the housing industry back on track until we clear out this garbage that's in there.
That hasn't cleared out yet.
In fact,
we haven't seen the bottom.
It's getting worse.
What do you mean?
There are some statistics from the National Association of Realtors, and they track the supply of housing units on the market, and that's grown from 2.2 million units about 3 years ago up to 4.5 million units earlier this year. So you have the massive supply out there of units that need to be sold.
Well, with the housing supply increasing that much, what does it mean?
It means that this problem, the economic difficulties, are not going to be resolved in a short period of time. It's not going to take 6 months. It's not going to take 12 months. We're looking at probably about 3, 4, or 5 years before this overhang, the supply overhang, is worked through.